All right, so last week was kind of a break-even week for me. I had good trades, I had bad trades, I had emotional trades. Yeah, but I'll get into all of that. But right now, here's how we start. Again, let's look at this monthly chart, because it's very important to look on the monthly chart right now, because the current draw on liquidity, in my opinion, or in my eyes, are these relative equal highs. And it's a lot of highs, right? It's a lot of liquidity to take from the upside. So if that's going to be the case, then it makes sense why this pullback is not deeper than it currently is. And I've been saying this for weeks, and I know I'm beginning to sound like a madman, but I think sometimes when you do higher time frame analysis and you look forward to things, you might be right, but your timing might be the problem, because something that you expect to be straightforward can take 2 weeks before going to where you want it to go to. And that's the edge the market has over us as traders, right? The edge the market has over us as traders is time. What the market can do with time, traders find it hard to do that same thing in time. So that said, in this dealing range on the monthly chart, we are in an extreme premium zone. However, we are in a buy program. So not because we're in extreme premium, we'll be looking to be sellers, because we are in a buy program, and the target is this relative equal highs. Now, when we take out these relative equal highs, or when price takes out relatively equal highs eventually, then it will be appropriate to look for reversals, right? But that is quite a journey from here at the moment. Now, if you look here now, what are we looking at right now? This was December's candle. This is January's candle. And if you look at it very closely, you will see that this, whatever fair value gap was here, has been balanced, and we're having a rejection from it now. So what that means is that, or what that looks to me is like, this pullback might be done. Right, this pullback might be done. Excuse me for that. This pullback might be done, and then the journey to the higher time frame objectives can be on, and then that's about a 600 pip run from where the market currently is. Okay, so that's it. Just for context purposes, January was a 530 pip month. Okay, December was a 354 pip month. So I'm not why I'm doing these measurements, that I'm not saying it's going to be in 1 month, or maybe in 2 months, but it's very doable. Okay, so now let's look at it from first principles. So from first principles, I like to keep it as simple as possible and say, you know what, let's look at it time frame by time frame and see where we're coming from and where we're likely to go to. And then that will give us a very, very sensible forecast reasoning. Okay, so on the monthly time frame, the first question to ask on the monthly time frame is, what liquidity are we? Because again, the market looks for liquidity, the market to balance inefficiencies, right? Which is this one that just happened here. This market balanced inefficiencies. The market will visit previously balanced price ranges, which is the only reason why I still think that the market can come down here. Now, again, if you look on here, when these equal lows were taken, this inefficiency was balanced right here. This guy balanced it. Now, it might not be a total balance, and actually, it was even a total balance. So just see, so it was a total balance. Okay. So this is what the market does. Now that the market has not come to balance, again, this was a balance of this point. Typically, we expect that the market can retest it, which is number 3, revisit balance price ranges, and then the market will always go to fair value. Okay. Now, in this case, what was fair value on this time frame? Well, it didn't get to what I would think is fair value, but we'll go to lower time frames and see why that might have been. Okay, so liquidity. So now, where's the most recent liquidity the market visited? These equal highs, these 2 months highs. So this is June and July highs, right? The market went there and took it out. So where is the next, where was the next liquidity to go to on this time frame? Nothing really. So this is the next one to go to. Now the market balancing inefficiency, I just pointed out, yes, it did balance this inefficiency. So where's the next inefficiency to balance on this time frame? Nothing really. Did the market revisit balance price ranges on this time frame? No, but this was the next one to go to. But because of how bullish I am, I doubt if this is going to be a possibility. Now, in the previous weeks, I talked about it. I said it can be a possibility, but now I'm having good reason to think that we'll not get there. And the reason I have to think that we'll not get there, again, this is our first sustained close above this monthly 75. So we had this close above it, and then the next close was below it, and that was literally a false breakout. And you can see in this, after this false breakout, price went back to equilibrium and then relaunched from equilibrium back in here. And then this is our first sustained monthly breakout, these 3 candles, and then we had a retest of it, basically to, you know, fill up all the imbalances, clear out all the liquidity before turning around. So coming back in here, in my opinion, there's not too much case for it, or there's not much case for it. So I think we're turning around, and I've been saying this for, like, I said this last week and maybe 2 weeks ago, and at that time I know I sounded mad, but it looks like I might be right. And I mean, I'm not in this business to be right anyway. I mean, I'm here to try to make money. So there's a very big trap in forex, being right. When you're right in forex, a lot of times, or when your focus is on being right, trust me, you'll just be a professor. But you'll be the kind of professor that doesn't have money, and that's not what that's one prayer you should always pray against, being a professor that doesn't have money. Anyway, so that said, we come into this weekly chart, right? And on the weekly chart, we have a clearer view of what liquidity we're coming from. So now in this case, these are relative equal highs. You see this high and this high. This is buy side liquidity, okay, which the market rated. Now, why does the market do that? Normally when you learn about price action, you put your stop losses above double tops, and then your stop losses when you're buying below double bottoms, right? Now, what does this do? You can see this wick here. The candles, in a candle, right, the body tells the story, the wick does the damage. This wick literally went to fish for buy side liquidity. So what did that do? Every stop loss that was placed above this double top, this took them out. Now every buy stop, because there are some people that trade breakout strategies, every buy stop that was placed above this high was also activated, and this ran them out. So this guy hit stop losses for sellers and activated buy stops, and has run those buy stops terribly into margin if possible. Now look at that. This is about 360 pips, right? So if you bought this, you're literally, you know, deep in the red, and that's a very, very painful place to be as a trader. So now this is the liquidity that market has taken out. Now where's the next liquidity to go to? Logically, we'll say this, but because of the higher time frame buy program, which I said we have a sustained buy above this 75, because this was the first solid close above the 75, and then we didn't have any close below it until it was time to take out these equal lows. And you can see these equal lows were sell side liquidity for sell stops, and also stop losses for buyers that put their stop losses below double bottom. And you can see how we rated it and completely took them out. Okay, so that's the logic behind why the algorithm behaves the way it does. So that said, this is another sustained, you know, momentum above this monthly 75. So it only makes sense to fulfill the objective of this program, which is to come here. Okay, now before it gets here, this is a balanced price range on the weekly chart, right? So this is the next area to look at as a potential draw on liquidity. Why? You have this only buy delivery here, you have this only sell delivery here. So inside of this range there's about this range is about, it's not even big, this range is about 68 pips. So inside of this 68 pip range, it's possible that you might find some resistance, which if this is going to to take us out. If we're going to, eventually hit this buy side liquidity, this might flip to support, but that's, projecting too far. So this is obviously the next logical point that we should be looking at in this market from here to here, and that's about 368 pips. And there's nothing that says it cannot get there next week, although we don't project too far, we just try to react. Okay, so this is the liquidity that the market has come from. The next liquidity to go to, since there's nothing to the downside in my opinion, is to keep going up. Now, what about imbalances? Well, this imbalance was partially filled, wasn't completely filled, and that's also okay. When it's not completely filled like this, it also gives you a hint that the price, that the market does not want to go lower. That's another hint for why we should be going to the upside. Okay, so I think we're done here. So we swept these lows and we're going to the upside. We swept these highs, had a shallow pullback, and then looks like the takeoff is coming back. Now, on the daily chart, right? Now, this is where it's interesting on the daily chart, and I'm going to be the first to admit that I got lost at some point on the daily chart, because on this daily chart, this right here is an established dealing range. So this low here took out previous lows. So this was the previous low, this was the previous low. You can also make an argument that this was a double bottom that this low took out, okay, and then turned around, and then this high turned around here. So this became our dealing range, and if this is going to be this being our dealing range, kept equilibrium here. Now, if I'm bearish, which for a while I switched bias to being bearish for a while, but I kept saying I was cautiously bearish. If we're bearish, then this would be the target to take out this low. But if we're bullish, well, this comes in handy. Now, last week I talked about this point very well. I talked about this point extensively, and I said last weekend what that, because this was where Friday closed, and I said, depending on Monday's close, I said if Monday closed below this, then this will flip to resistance, and then we should look for price to come and take out this dealing range low. That's what I said, and it's still there. Now, another thing I said is that if price remains above it, then that monthly buy program will continue to kick in. Now, Monday, for some reason, Monday I didn't remember this on Monday. Okay, in fact, I forgot this thing throughout the week, and I think because after Monday I deemed this zone, like I reduced the brightness, so I didn't see it early until Friday. I actually saw it on Friday morning, and it saved me. Actually, it saved me on Friday, but I'll get back to that. Anyways, now why was this place important to me? This area was important to me because of this. We had only buy delivery here and only sell delivery here. So it made this range a balanced price range. And a balanced price range, for the most part, I've shown that is the true support or resistance. Now, the next time price came here, it delivered only buys. And then the next time price came here, it delivered sells and buy. But it did it almost immediately. So this technically was a stop hunt, because after the market came here, the very next candle closed back above. Now, another thing that the very next candle did here was to almost balance this entire fair value gap here, which brings us back to this argument, or not argument, but brings us back to this guiding principle. The market will only look for liquidity, balance inefficiencies, which this pretty much did. It didn't completely balance it, but that's also the hint to tell you that it's not going below. All right, visit balanced price ranges, which is what it did, and go to fair price. Now, it spent a lot of time at the 50%, which is the fair price of this range. Okay, now that also means something. And also, look at Friday's low. Friday's low somewhat confirmed to me that this is the true support. So for me, I feel like, or I have good reason to believe that this right here is over, right? I think the bearish program is over, and now we should be looking for bulls. So now if we're looking for bulls, the next thing, the first hurdle we'll have to cross will be this guy here. That's the next hurdle we'll have to cross, this guy here. Now for me too, I also would have to change this dealing range from here, from this low to this low, but I'm only going to do that when we have completely taken out this high, because that would be the sensible thing. Although it's actually active right now, I can say it's active right now, and then this is going to be the 50%, but I can do this also for the 4-hour chart. So I would rather do this on the 4-hour chart, because I think it's almost, well, it makes sense to, you know, keep it there for now. Anyway, so that said, this right here being the low of Friday and having this very, very nice rejection, because from Friday's low to the close was 61 pips. So this very nice rejection gives me a very good hint that, you know what, it's time to go. Okay, so that said, what is the next thing I'm looking out for? There was also a balanced price range here, which supported my reason for buying on Wednesday. I've deleted it now, but I can still draw it. From this low to this high here, right? This delivered only sell, and then this point delivered only buys. So when Tuesday closed here, right, Wednesday gave me a good reason to buy this. Well, there was a good rejection on Wednesday, and then I bought it somewhere along the line to take out these highs. I did that, but eventually there was NFP on Wednesday, and then it closed below the consequent encroachment. Now these things don't look like big deals, but they are very, very big deals in the algo, in terms of the algorithm, right? In terms of how price or how the algorithm sees the market. These things are very big hints. Now this closed below this consequent encroachment kept me bearish, made me say, okay, you know what, it looks like we'll be bearish. But again, the bearish movements or the sell movements were so staggered and so uncomfortable, right? It struggled really to sell, which is another hint too that, you know what, maybe the buy program is kicking in. But another thing too that is very important to notice is that when you look at trends, right? When you look at trends, okay, let's look at this buy program here, right? Now, when it switched to a buy program here, it spent a whole week, or even more than a whole week, in a pullback, okay? And then you get 1 week of boom, buy. Now after that 1 week, you get 2 weeks of slow movement. Then you get another week, boom, buy. After that, you get 3 weeks of very slow movement. So these are the things, this is what the market can do with time, right? What the market can do with time is that it can weaken you. It can make you see things differently. Like for example, in all of this movement, you had 3 weeks of this. It's very, very easy for you to forget that you are in a buy program, especially on the lower time frames, because every time you try to buy on the lower time frames, you get stopped out. Every time you try to buy, it will be a struggle. Even when you eventually sell, it will still be a struggle. So those are the things that make you, and when you stay in that frame for a long time, right? So for example, now you spend 2 weeks here, you spend 3 weeks here, but in a buy program, you spend 1 week, 1 week. Now those 1 week, 1 week, a lot of times, because of the 2 weeks you've spent here, you might not even catch on to this buy early enough. Same thing, because of the 3 weeks you spent here, you might not catch on to this buy early enough. You might not catch on to this buy early enough at all. And then after this buy, this sold from this balanced price range down. It also came down to this point. You might not even catch on to this buy early enough. Now this is one of the rare times that you had 2 straight weeks of buy, right, inside of this buy program. Then you had 4 weeks of sell, or 4 weeks of, you know, being annoying before another week. So the point I'm trying to make here is that you spend more time counter trend trading than trading, well, than being in the trend. For example, when the market closed above the 50 for the first time, this was the first close above the 50 at the time we're in this dealing range. This was the first close above the 50. Yes, we had another one, and then we had 3 weeks of counter trend trading. Now in those 3 weeks, I didn't lose sight of it, but I found myself having good reasons why I should be a seller. But I was able to, this kept me focused. This buy side liquidity kept me focused on the higher time frame objective, which was why this week was so fantastic. But after we took out that buy side liquidity, I had moments of confusion, and that took about 2 weeks, because from this high to this low was exactly 2 weeks, and a lot of pullbacks are 2 to 3 weeks. So that's another thing to understand. Anyways, so now back to the daily chart. So as I said, this is what I'm looking at as support. I don't need this anymore, right? And the next objective obviously will be to take out this high. Obviously there's going to be traffic here, but at the time we'll be able to flip this into support. Then it opens the door for this high to be taken out. Okay, so that's just how the daily chart is going to print, or we look forward to it printing. Now the 4-hour chart. Now this 4-hour chart was also very, very interesting, and I mean that in the form of, I'll explain what I mean by that. So since we started dropping, right, we had this very smooth move which I spoke about before it happened, and then we got down into these areas here. So now this final low was at a 4-hour fair value gap here, and I can make that brighter now because it's for educational purposes at the moment. So this was a fair value gap. So this low to this high to this low, this was only buy side delivery, and you can see how price came into it. Just tapped to it didn't even get to the midpoint, and then closed here. Okay, so this little gap it left was the hint that it looks like we're going to go to the upside. So Monday, right, after projecting all of this, for some reason I saw a good sell opportunity on Monday, which actually delivered 2R, and I took that. And for some reason I lost my train of thought into why I should have still been bullish. Eventually, when I caught onto it that I should have still been bullish, I bought here, which is not exactly a smart place to buy, right? That took me out at break even, luckily. But again, what did it do? It came to fill up this imbalance. And then there was NFP on Wednesday, and you can see what NFP did. Now, on Wednesday, we caught this buy, right? Me and the people in my group, we caught this buy because I called it very early. We caught this buy, and the aim was to take out this equal highs, which it did and turned around. Now, this turning around literally kept me bullish and bearish. And it was in this turning around that kept me bearish that made me reduce the brightness of this guy, and I didn't see it early. However, on Friday I was going to keep selling, and then when I was doing the proper review, I saw that I had completely forgotten about this daily balance price range. So I said to myself, and I said to the group, that it would not make any sense to be selling right into a potential support, considering the fact that since Monday market has been above it. So basically on this 4-hour chart, inside of this 4-hour daily range, market has been trading inside of premium. But even inside of premium, sales have been difficult because the only smooth sell in this whole thing was NFP, and obviously only a madman would be in NFP sell. That was the only smooth sell in here. Every other time was a bit difficult. It was really, really difficult. Now you can make a good argument for why this was a good sell, but I didn't catch it, so I'm not even going to say. But it was a good move actually. But for the most part, you can see that it struggled a lot. And now it looks like the buy has resumed. And then the buy has resumed. On this time frame, you wouldn't see anything because nothing makes sense on this time frame. However, the daily time frame is what gives you the hint that this was a balanced price range. This was a false break below, and then we had a close back above. And this tested as support once and retested as support again. So you can see the logic here. The logic here is sound as far as I'm concerned. So going forward, what is the next thing? On this 4-hour chart, nothing here tells me what to look for next, so I'm just going to go straight to the 1-hour chart. However, though, I'm going to check on the weekly chart again, because if I'm looking for a bullish week, then the power of 3 says that I'll look for open, low, high, close. But before then, let's stick back on this 4-hour chart. Okay, so now on this 1-hour chart. So on this 1-hour chart, I had a 1-hour daily range from this high to this low, and I was looking to sell, right? So first things first, I was going to sell in London, but the reason I didn't sell in London was it didn't get into premium, which I'm like, okay, that was something to preserve me. And then this was CPI. Now the thing about CPI is that generally CPI goes in line with the trend. Generally NFP goes against the trend and then corrects itself. Generally. So this was NFP going against the trend. But at the time it looked like the trend. Now another thing that is quite interesting is this balance price range here. This balance price range here, for the most part, held throughout this week like a real G. Now it started off here, 3rd of February. So we had our only buy here, and then had only sell, only buy. Okay, and after that, what did it do? It served as support here, because you can see that this was week that it did a stop hunt, closed back above, served as support here, very, very gallantly, served as support here, served as resistance here. The same thing happened, just the opposite, served as resistance here, served as resistance here, was eventually flipped to support here, held as support here. Now I bought this on Tuesday morning. I bought this. I saw green in all of this, and then it came back to take me on a break even. You know, I knew it was not a very good place to buy, but this balance price range was it was a bit difficult to resist it. However, eventually it still held as support here. Before we had another full candle close below. Now this was a candle close below, but the next one closed right back above, so this was a false break. Okay, so it's like a stop hunt. Now we had another full candle close below, and then this held as resistance. And then now the reason I took this on Wednesday was, now on Wednesday I looked at this area here as a balance. I looked at this area here as a dealing range from here to here, like a small dealing range. And as a small dealing range, this was the equilibrium. Okay, now this equilibrium lapped perfectly with this balance price range, and then earlier in or late Asia, it held here as resistance, and then flipped to support.
To it, but again, Vickery is equal to
flipped to support. Flipped to support almost immediately, just before Frankfurt session. Now, so this was Frankfurt open. This was Frankfurt open, and Frankfurt open found support in here. So I bought this at London. I bought it just at London open. London open low. That's when I bought this. And then the target here was to take out these equal highs, which it did. And after taking out the equal highs, you can see, you don't even need anybody to show you, it turned around. Now, another thing it did was, at the time this made a gap, this filled that gap up. So again, filling up imbalances, this filled up that gap for a turnaround. So again, after NFP, this held as resistance from Wednesday, Thursday. Now Thursday, I didn't take this on Thursday, and I don't even know why I didn't take this on Thursday, because I wasn't sure anymore, because all of this price action was a bit difficult and I wasn't sure anymore, and I forgot that this area here was what I should have been looking at, because if I remembered, because I took this off the 1 hour charts, I don't even know why, but if I remember, this should have been my hint. Anyways, this was Thursday, right? Thursday had this New York session drop, right, which created a double bottom here, right? Almost a perfect double bottom. And look at Friday's low. Friday's low raided these equal lows right into that daily balance price range, and that became the low of the day, right? Now like I said, I was going to sell this, and the reason I was going to sell this comes on the 15 minutes. But before then, let's go to the weekly chart to see what I want to show you. Okay, let's first talk about the 15-minute chart. So now on the 15-minute chart, this was why I wanted to sell this. I wanted to sell this off of this 15-minute balance price range, which was also in the 1 hour premium zone. But it didn't get there in London session, so I let it go. What I did realize, or what I did not realize, was that this is the daily 50%. This is the daily balance price range, which created a low. I should have bought this. I should really have bought this. And another thing too, let me go to Euro USD to see if there was a hint. Now this video, I know this video is getting long, but I feel like it's stacked with some gems that will make sense. So let's see. Now on the Euro USD, this was Friday's low, right? This was Friday's low. So why am I here? So I'm here. I wanted to look at if this gave okay, it didn't give any divergence. It didn't give any divergence at all. Well, actually it did. So this is 845. This low is 845. and then this low here is 7:45. Wow, that's a whole 1 hour. So what happened 7:45? 7:45 was here, and then this is 8:45. So this gave lower low, but it's not very clear divergence. So let me not force anything. So yeah, let's go back here. Okay, so this was what I was going. So I was gonna sell this, but it didn't get here. And then in New York session, this was actually CPI. So CPI came in there and rejected 20 something pips. I'm like, oh wow. But again, I had realized before then that this low was there, so I didn't see the sense in selling into this low, because that's like selling into support, and that's, you know, suicidal. However, though, it did come down in here, right? It did come down in here, and I was asking myself, am I going to regret not selling this? Then when this rejection happened, I'm like, okay, yeah, of course I'm not going to regret not selling this. So now that we're here, what am I looking out for next? Well, the first thing my eyes can see, obviously, is this 15-minute balance price range here. So I will draw this out and see if we get a low to it between Monday and Tuesday, which might serve as the low of the week for next week. Okay, now if that happens, I'll be sure to update a video on that, looking at it. So that's what I'm looking out for this chart. Again, I'm bullish. With that 15 minutes, the price comes in at 26240. Okay, so I'm just going to put a line there, 26240, to see where to line up on the weekly chart. Now, why am I here on the weekly chart? I'm here on the weekly chart because if we're going to have a buy program, ideally what we want to see is an open, then a low, right? After the low comes a high, right? After the high comes a close. This is what a weekly candle, a bullish weekly candle, is going to entail. We'll have our open, low, high, and close. So if this is going to be the low, I'm trying to look at where on other time frames it might overlap, right? Just so you follow the logic. Now, if this is going to be the low, where does it overlap here? This candle open. Okay, makes sense, quote unquote. If it's going to be the low here, where does it overlap? Nothing here, makes sense. And then on the 1 hour, well, on the 1 hour, this candle open overlaps with it. So this is going to be a 1 hour bullish order block. So yeah, you can see if that comes there, you can see the logic for why it will make sense. And then when it comes there, eventually we'll start taking out all of these highs one after the other. We'll take out this one, so this dealing range will be done. Then we'll take out this one, and then, you know, keep going and so forth and so on and so forth. So those are my thoughts for the week. You can, you know, drop a comment on what you think. Like, subscribe, and share. Have a very good weekend. Thank you.